Herald van der Linde is with us in our studios to take us through what he's making of things. Herald, great to have you with us here.
Good to see you. Live now this time.
I think first conversation in 26, we've spoken, no, not this year, right?
We haven't spoken this year yet. I
think there's still time to wish you a happy 2026.
Yeah, Happy New Year, that's right. Yes, thank you very much, yes.
So it's been tough, right, Herald?
Yes.
Especially for India.
For India, it has remained tough, right? There was a bit of attention to India early Q4, I think it was, late last year, and India performed very good. And then suddenly that dwindled a little bit again. And I don't think that's too much to do with India, to be extremely frank. It's got more to do with Taiwan and Korea. The AI story is still doing very well. Order flow is good. Chinese exports are very strong. That is the build-out of data centers in the US. So people need servers, chips, cooling systems, you name it. And they are made by the Taiwanese in China or the Koreans. So the momentum is in these markets, and we've seen people shifting back there. And that meant, yeah, the attention left India for the moment, yes.
So you upgraded India, I think, towards the end of last year
right,
to
yes.
an overweight, and you believe that at some point this AI trade is looking a little crowded in markets like Taiwan, Korea, and therefore India will come back in favor and FIs will return.
Yes.
Well, that's not played out. So now when you speak to investors, both domestic investors, you're here in India, so outline your agenda for us. Domestic investors, foreign investors, I mean, what is the view now towards India?
I think actually the story is still the same, and I don't get that much pushback on this particular story. I had a round table last week, and we asked people for ideas. India came up, but I got the feeling that people don't want to play it yet because that momentum is still there, and things have looked a little bit better. So your valuations look a little bit better. Your earnings growth is starting to turn around, or at least a bit of earnings upgrade starting to come through. But so the story is actually improved a little bit. But if you then look at the order numbers and the sort of earnings upgrades that we see coming through of companies like TSMC and Hynix, they're really good. And you're right, people, I mean, they struggle to buy more almost. They have full exposure there.
Herald, good to see you in the studio, Herald.
Yeah.
What's worrying the FIs most? You know, the last few conversations we have had with you, you've been also telling us maybe in 2026 they make their way back. Now the valuations have corrected themselves to some extent. Hopefully earnings do come back as well. The other problem is, I think, on the currency front, where we're seeing the rupee slip. Out of these points, you know, what is it that's worrying the FIs to come back home? Because they're underweight. The holding is at the lowest levels ever. What's the key important factor? Or are the other markets still too good to ignore?
I think the other markets for the moment are too good to ignore, and that's where the momentum is. And I know people who are somewhat uncomfortable with it, but they think, you know, this might go on for a couple of months. And if the performance is there, and you leave too early these markets, well, then your boss will say, hey, why you're underperforming? Why did you sell so early, right? So they're playing the momentum. But I think, broadly speaking, there are three risks that come up for India. The first risk is currency. Yeah, and that is just a fact of life we have to deal with. And you can deal with that if you invest here by having companies that export and that give you sort of currency hedge. The second risk is what happens with the earnings in the near term. So we see earnings recovering, but is that really true? What's coming through? Is this sustainable? What sort of earnings are we going to see this year? The feeling was that, well, the feeling is last year we had just below 10%, 7-8% or something earnings growth. Next year, people working the assumption is going to be 11, 12, 13, something like that. And then a third risk, and that is, again, it's not a major risk factor, and it's a bit of a longer-term risk. I think India could do what we've seen in Indonesia. Indonesia, very profitable market 15 years ago. Margins very high. Companies make a lot of money, good cash flows. What then happened is that you had a new president coming in, Jokowi was his name, and he says, I want to build out infrastructure. So he invested in railways, roads, harbors, bridges, you name it. That meant that access into the market was really good. That comes at a time when e-commerce, I mean, you can see the analogy here with India. E-commerce is building out, so a lot of companies say, hey, we can do the distribution for you. And we've seen Chinese, Korean, Thai companies coming in. Competition intensifies, margins go down. So you get, although you had decent economic growth, you get earnings growth that is going to be slower. And my suspicion in India is that this could happen in the longer term as well. It's not really a risk, it's just a fact of life, but it's something that we need to understand as well.
Herald, the union budget is a big deal in India.
Yeah, it's a very big deal.
Everyone starts by saying, oh, the budget doesn't matter anymore. And then, when the budget is presented, it does matter. And
Yes.
we found out.
Yes.
So what's your?
It seems almost like it's a celebration here, the budget. It's so much attention goes into it.
And we are
That's right.
celebrating on Sunday.
And you're saying Sunday?
Sunday.
Oh, so you'll be here on Sundays working on it.
You can join us.
Yeah, I can join you. That's a good idea. I'll come back for it. Yeah, no, but the budget is really big, and I think sometimes too much attention is being paid to it. But it does show the direction of what the government wants to take, right? And of course, that creates a lot of excitement. All the analysts have to figure out what that means for their companies, and that's why it's such a big thing. There is something happening elsewhere in the region that we have to be cognizant about as well. Indonesia is going through a very similar sort of story as India at the moment. They've cut interest rates, they've done fiscal stimulus, the economy is starting to recover. It's a bit behind where India is, and the earnings might start to recover this year as well. Very much an Indian sort of story, right? But they've run to almost to the limits of their budget, and now the markets are getting worried. Are they going to break that? So they have a self-imposed 3% limit. They're at 2.8, 2.9 now, so they can't really do that much more. And the feeling is, what if they break it? Now, that's an Indonesian story, nothing to do with India. But if they would break it, people are going to say, where else in emerging markets could this happen as well? And then India would flare up. And I think actually your fiscal position is good, but yeah.
It's actually, some would say it's too good. And it doesn't need to be so good in that sense.
Yeah,
right?
so you're in a very different
As someone
story.
said, I think CIO of a large mutual fund here in India, said, well, why does it, at HDFC mutual fund, he said, why does it have to be such a holy grail, right? Why can't we spend a little bit more? Because it's been very, very disciplined about it for the last 10, 12 years, right?
Yeah.
So, but if there is requirement and there is tax shortfall, why not try and borrow a little bit more? Yeah. I mean, if you can, and expand the deficit.
Yeah, the problem is, of course, I actually would agree with that. And a lot of countries need more investments, and the government needs to lead that. Indonesia is one, India is another one. The problem is that we're living in a world now where a lot of actually developed markets, economies, they're overextending. So we now see worries about the fiscal position in the US. Bond yields went up earlier this week again. In the UK, in Japan, it's becoming a worry. The funny thing is, in the emerging markets, the feeling it is pretty good. So, but it could be that markets are getting a little bit sensitive to this particular issue. But I do agree, India could probably spend a little bit more and do more.
My only point is, with all the fiscal discipline, I mean, the rupee is at 92.
Yeah.
Right?
Yeah. That's right, yes. No, there's a consequence, right? There's only two things you can do with growth. Either you spend more, that's a fiscal expansion, or you cut your interest rates. Now, if you don't do fiscal expansion, you're going to cut your interest rates. That's what happens here, and that doesn't help your currency. But that's just the way it is. The really way to counter this is to get money in. A big investment boom. For that, you need to open up industries, make it easy to invest. You need to create an environment whereby people say, "Oh my God, we have to build out some whatever it may be in India." So that's a whole different story altogether. Yeah.
Just getting back to the point about India versus the rest of the emerging markets, and if FIs will make a comeback here. So one of the drivers is supposed to be earnings momentum, a recovery, right? 12-13% seem to be the estimates this time. Yeah. But the pushback is that the earnings estimate in the other markets is still more, right? Your Korea, Taiwan, etc. So take us through the EPS estimates for the other markets, juxtapose that with the valuations that they're trading at versus India, and then make a case for money to come back to India.
I'm going to focus on Taiwan and Korea and also on China, because there's a couple of things going on there as well. What you just see is continuous earnings upgrades, in particular in Taiwan and Korea, because of the build-out. So you have now almost $1 trillion is being invested in data centers and AI, and we're going to spend maybe another $1 trillion. This will come with problems, I believe, at some point in time. I don't know if you're paying for AI, but the vast majority of people that I know, they're using AI apps, but they're not paying for it. And if they pay, it's $20. Microsoft, I think they're making about $1 billion out of AI now. But they said earlier this week, listen, people need to adopt this because we're making a lot of investments as an industry. But that's a different ballgame altogether. The thing is, but building it out, you see these earnings upgrades coming through from TSMC, in Hynix, in Samsung, and they have enormous operational leverage. So big fixed costs, a bit more sales, and your margins expand. So you have strong earnings growth. We're talking about 30, 40, 50%. Very high. That will moderate, but the earnings are still being upgraded, and that's where the attraction is, and that's people don't want to leave that. The story in China is a bit different. It's actually the Chinese that are buying Chinese stocks, not foreigners. So the foreigners are not going back to China. They're just going to Korea and Taiwan. It's the locals in China that have basically sitting on an enormous cash pile, $23 trillion US. It's just the cash in the banks by Chinese households, and they haven't done anything with it. And there's a lot of it they won't touch because it's their pension, but maybe $6 trillion they might start to allocate into property or to stocks or crypto or gold, whatever you can do. It seeps out as well into Hong Kong. So that's driving the Chinese market to a certain extent. So I think the Chinese market is a different story. It's really Taiwan, Korea, and the earnings are still being upgraded. And we're talking about very strong earnings numbers there.
Since you briefly mentioned gold, let's talk about that as well. You know, in gold here in India, it's a very, very important asset because
Absolutely.
we have 35,000 tons of gold with, households.
Yeah.
And of just putting in the numbers, the value of gold households that households hold is now, more than what the entire equity market is, which is unusual in comparison to the remainder of the globe. Yeah. Because if you look at Germany, Italy, that's in the vicinity of 25 to around 40% approximately, at most. What's the view on this asset class? From an India perspective, it's actually creating that wealth effect.
Yeah.
But as an asset, what's your take? As of yesterday, that 35,000 tons of gold is more than $5 trillion. Yeah. While the equity market is around $4.5 trillion.
So for a lot of Indian ladies, it must have been a really happy new year. And, seeing their jewelry being repriced. We're living in a different world. Geopolitics is changing. Central banks understand that, and particularly emerging market central banks. They are worried that at some point in time, I mean, some of them have actually told this to me, that they might get cut off from dollar exposure. Let's say there is a crisis at some point in time, for whatever reason, doesn't matter. You need dollars. In the past, you could go and say, can we swap this by other central banks or the Fed? But what if that doesn't happen? So you see central banks say we need to build our own financial resilience in this sort of new geopolitical world that we're creating or is unfolding. And we need to make sure that we have not only dollar exposure, but other currencies as well. But yeah, there's only so many Australian dollars you can buy and yen you can buy. So, and of course gold. So they're buying gold. But central bankers don't think about making profit. They just need exposure. So you got an asset where there's not a lot of supply coming up. Supply is fixed. There's only, there's only 2 swimming pools of gold in the whole world. You put it all together, it's not a lot. So supply is fixed. Demand from the central bank is good. And that just creates an upward drift. And that's what we've seen. It's happened actually some couple of years ago already. But so we think there's further upside risk.
Further upside for gold even from here on. Let's wind this conversation down, Ren, with the top themes that you like here in India. In the past, you had a little bit of cement, discretionary staples as well in the pack. Give us the top 2 themes that you'll have here in the Indian markets.
I think the top theme for me remain, I always like actually the domestic sort of story in India. I like stuff like, for example, hospitals. They're a bit pricey to be extremely at the moment. If I would look at the stocks that we would be focusing on, it would be some of the auto company, discretionary spending, some of the jewelry companies. I think
Mahindra is something that you'll have liked. Trent is something that you'll have liked.
Yeah, there's a couple of these kind of jewelry companies. There's one with Kalyasha, I think it's got. I forgot, but anyway, it doesn't matter.
The jewelry company.
Jewelry, retailers, auto. We like the banks, not expensive. And if earnings and credit growth improves, that should be pretty good. So there's a few of these sort of domestic names, but if you come in as a foreign investor and you want a little bit of, you're worried about the currency, you buy some IT or something like that to hedge that out.
Absolutely. Thanks very much, Herald. Appreciate you joining us. Really, thank you for dropping by. And see you on Sunday.
See you on Sunday, exactly. Good luck on Sunday. Yeah.